Imagine waking up, opening your phone, and viewing the chart of Bitcoin, just to find that a single BTC is worth $10 million. Is this the stuff of fantasy, or an almost inevitable destination hidden in the data? In a world where government prints money as easily as newspapers, perhaps it's neither wild delusion nor blind faith, but a logical outcome of systemic shifts. Today, we explore the illusion of fiat money, Bitcoin as our mirror, and why $10 million per coin might be written in the economics of our future. It all began when Richard Nixon closed the gold window in 1971, severing dollars from any real backing. Since then, money has become purely a promise backed by trust. But as Satoshi Nakamoto warned in 2009, the root problem with conventional currency is all the trust that's required to make it work. The central bank must be trusted not to debase the currency. History shows how easily that trust is broken. Governments have quietly inflated their way out of debt. US dollar purchasing power has absolutely plummeted. What costed $100 in 1971 needs nearly $670 today, meaning the dollar has lost 85% of its value in 50 years. Each year, the Fed adds more zeros. The US M2 money supply has exploded from $286 billion in 1959 to over $21.94 trillion by May of 2025. That's a 77-fold increase of paper money in just 6 decades. Economist F.A. Hayek put it bluntly, and I quote here, "With the exception only of the period of the gold standard, practically all governments of history have used their exclusive power to issue money to defraud and plunder the people." Essentially, in other words, the state quietly taxes savers through inflation. Today's headlines cheer stimulus and quantitative easing, but for millions it feels like an unseen tax. Prices rise, wages stagnate, and you can watch your savings just shrink to nothing. Meanwhile, each decade brings a new bubble. One year it's real estate, next year it's equities. Yet all of these asset classes, stocks, bonds, real estate, are priced in the same debasing currency. They all carry hidden inflation risk. Hayek's insight is chilling. History is largely a history of inflation. Usually inflation's engineered by governments for the gain of governments. The fiat system demands we accept that these pieces of green paper are real wealth. In an Orwellian twist, money becomes a religion. As George Orwell observed, money worship has been elevated into a religion. Money is what God used to be. We're told each printout saves the economy, yet we live the quiet decay. Pension funds shortfall, devalued paychecks, pensions stranded. The illusion is that fiat is magic until we feel it in our own empty pockets. In response to this, Bitcoin emerged in 2009 as an almost philosophical antidote. It holds up a mirror to the system. Bitcoin is finite. Code enforces a cap at 21 million Bitcoins. Unlike dollars, it cannot be conjured by a keystroke. It is decentralized. No king or Fed backs it, so there's no single switch to turn on the printing machine. And it's all transparent. All transactions and supplies are visible on a public ledger. Imagine a ledger written on stone tablets rather than sand. Satoshi's white paper described this trustless dream. He wrote that Bitcoin was designed so that central banks must be trusted not to debase the currency, but the history of fiat currencies is full of breaches of that trust. In other words, history demanded a systemic reset. Bitcoin is often called digital gold, but it offers more than gold ever did. Gold's supply drifts up by a few percent each year, diluting even that storied store of value. Bitcoin's supply, by contrast, halves on a predictable schedule until virtually no new coins are minted after the year 2140. Any new demand simply pushes the price higher because supply cannot change. As one individual quoted here, Bitcoin's fixed supply means it is the first monetary instrument incapable of being diluted or devalued from within. In the waterfall of global capital, Bitcoin becomes a new basin that never overflows. Like a mirror, Bitcoin reflects the failings of fiat, distrust, inflation, opacity. It is incorruptible in principle. Cryptography and open code replaces politics. That doesn't make Bitcoin instantly stable. It's volatile now, but it means that every Satoshi holds a simple promise: I cannot be inflated. As Leon Wonkum writes, Bitcoin's deterministic supply schedule, which is hard capped, creates an incentive to hold Bitcoin. It is an alternative ledger of truth in a world of hidden printing. Bitcoin also serves as a mirror to our world's choice. Every Bitcoin transaction is permanent and public, in contrast to the smoke and mirrors accounting behind dollars. If governments can fudge promises, Bitcoin's blockchain promises only one thing: scarcity. By existing purely in code, Bitcoin offers a way for individuals to opt out of state-managed money. Some say it's pristine collateral, an unforgeable asset on which loans could one day be based, untouched by central bank games. So how do we get from today's price, just around $118,000 by the time of this recording, to 10 million? Not by hype or sudden mania, but through sheer math of shifting financial world. First, consider fiat devaluation. If a currency can fall by 99% through inflation, a Bitcoin could rise 100-fold just to keep pace. No one expects the US dollar to hyperinflate like a Weimar note, but even gradually erosion can be dramatic. Many analysts assume central banks will continue some inflation indefinitely. Second, imagine global wealth repricing. Today, all global assets, including stocks, bonds, real estate, gold, cash, they add up to an order of $900 to $1,000 trillion. If people decide that up to 10 to 11% of that vast pool should rest in Bitcoin as a safe store, what price does that imply? So we could look at an estimate here that breaks it down at $10 million per coin. Bitcoin's total market cap would be roughly $210 trillion, which is 21 million times 10 million. Surprisingly, that's only about 10 to 11% of world wealth, assuming total wealth keeps growing. In the grand scheme, a world allocating 1/10 of its wealth into a truly immutable store of value isn't that inconceivable. We already entrust far larger amounts of assets that have uncontrolled supply growth. In other terms, that can mean some of the 300 trillion in real estate or 110 trillion in stocks flows into Bitcoin as investors hedge against further dilution. Importantly, this isn't magic money. It's a reshuffle of claims. As capital flows toward Bitcoin, it flows out of fiat-based assets. Central banks couldn't stop Bitcoin even if they wanted, short of a technological draconian block on the internet. In free markets, increasing demand for fixed supply asset must show up at higher prices. We don't even need everyone to adopt it, just enough major buyers to shift part of their treasury into an asset that cannot be printed. Another factor is collateral and reserve status. If some central banks or tech companies begin to treat Bitcoin as a reserve asset or collateral, trust and adoption could snowball. The narrative could flip from risky crypto to hard money in a new global order. Already, the idea of Bitcoin as pristine collateral is being discussed by bankers and crypto advocates alike. It is bearer, portable, probably scarce, and doesn't require outside credit. Finally, consider technology-driven deflation. Some futurists argue that advancing tech such as AI, robotics, abundant energy will make goods cheaper over time. In a traditional fiat model, deflationary pressures are fought by central banks creating inflation. But with Bitcoin, falling prices of goods would effectively increase the purchasing power of each coin. A person holding 0.1 BTC, about $10,000 today, might see its real purchasing power rise 100-fold by 2035 as technology slashes prices. In that scenario, 10 million isn't just a number. It's a natural interplay of a fixed money world with a deflationary economy. So in essence, is $10 million Bitcoin delusion or destiny? Perhaps that question itself needs unpacking. If Bitcoin did reach such heights, it would tell us something profound, that we choose truth over paper. Every decimal point that price climbs is a signal that market participants are fleeing the illusion of unlimited dollars for something finite. In Orwellian terms, it would mean the currency of power is finally being challenged by a currency of choice. It's not about being richer. In a world of 10 million Bitcoin, your wealth isn't measured by what the state says it is. It is measured in units nobody can inflate away. That is true sovereignty. You literally own your money's worth, secured by cryptography and consensus, not by politicians' promises. In Hayek's vision, that would be the moment money truly came out of the government's hands. And it's about truth. A Bitcoin-denominated world would be one where the numbers aren't secret. All balances and transactions are known and immutable. There is no hidden printing and no hidden debt. In a sense, such a price would vindicate Satoshi's thesis that trust and centralization are dangerous. Every 10 million figure would be an accident of the last 50 years of money printing. Of course, this path has profound choices. Do we reward honest money or continue printing ourselves into debt? Every decade brings new faith in spending our way to prosperity. But history reminds us, if liberty means anything at all, it means the right to tell people what they do not want to hear. Bitcoin tells an unwelcome truth to those comfortable in the fiat illusion. In the end, a $10 million Bitcoin is more than a price target. It is a lens on our times. It asks, do we trust in ephemeral paper or in an incorruptible record? As a final thought, recall Hayek's warning from the 1970s. Governments inevitably inflate for the gain of governments. Bitcoin's rise could be destiny's answer to that, a choice for truth and control in money.